to bring you guys an opportunity for additional lead generation, right? And I'm not sure whether you guys have experience serving or looking into the foreclosure market. And there's a reason why I wanted to bring this over or bring this subject to you as something that perhaps you could put into another source of revenue, another source of lead generation. Remember, when we are looking for or seeking for lead sources, right? If you are the way you're supposed to be handling your business, that you used to have different colors of lead generations, right? And perhaps this foreclosure subject that I want to share with you today could be something that if it speaks to you, if you think you're in the right area based on the information that I'm going to share, maybe it's something that you could consider, because I'm going to speak about my experience and also about how lucrative it could be, because you can literally turn these deals into multiple sources of income, meaning you can work with one client several times as you go. So before we launch into the subject matter, I want to quote, or I want to share the quote of the day. Let me know if you guys can see my screen. Actually, this came up. No, this is very big. Let me see if I can minimize my screen a little. Do you guys see my screen?
Yes, ma'am.
Okay. So, it's July, and of course, we are already in another, Q3 basically of the year. And I wanted to talk to you about, it's very important that we speak to ourselves a certain way in order for us to engage, in order for us to prepare our mindset every week, and of course, in everything that we get to do daily. So I came across this list of words, or the way we should be speaking to ourselves, and I want to share it because I think it's a good way of you guys can shift the way you maybe address yourself, or maybe the way you address other people in your downline, or perhaps maybe that you yourself are a coach and you want to make sure that when you are speaking and basically bringing value to another human, you select the right words to make an impact and to make that last. So what can I say to myself, right? So there's a list of, instead of, try thinking about, right? So instead of, I'm not good at this, regardless of the situation that you're going through, just maybe think about, what am I missing, right? So instead of judging yourself about, oh my God, just for the lack of a better word, suck at this, maybe what am I missing that it's not really perhaps giving me the results that I'm seeking, or perhaps I'm not seeing the results as fast enough that I would like to see. Another phrase that we tend to use often, instead of using I am awesome at this, try to say I am on the right track of this specific goal, right? I am really, moving forward step by step to achieve whatever I want to achieve. Instead of using, the line, I give up. I'm sick of this whole thing, I give up. Try perhaps thinking about, I'll use some of these strategies I've learned, and maybe I could apply it to, some other goal that I want to achieve, or another aspect of my life other than perhaps my business, that it could be impactful, right? Instead of this is too hard, try to shift that line into, this may take some time and effort for me to see the results that I'm seeking, right? The other thing is that we tend to use a lot is that, I can't make this any better. Like, this is it, like there's no way around of this specific subject matter for it to grow. Try thinking, I can always improve, and I'll keep trying, right? So, and then the last sentence that it shares, it says, I can't do math. And we realtors do that a lot. It's like, oh, that's the lending side of the business, I don't have to think about math. Just go ahead and shift and say, I'm going to try, right? And train yourself into learning some sort of a skill that is going to make you a more effective realtor at the end. Because remember, this business is all about relationship, and you get to bring a team every time you're serving a client. So you need to have, your team for lending, you have to have your team for escrow, and you have to have the team that supports you on the back end in order for you to move the transaction forward. And that's what I wanted to share with you guys today. I also have a guest, a speaker. We heard about our lender, Jennifer Castañeda, for Supreme Lending a few weeks back when she put a presentation for us. And the reason why I wanted to bring her over today is because I want her to give you guys an update on the lending side, what's going on with the interest rate. I know that everyone experienced it 2 weeks ago, a little bit of better behavior when it comes to the interest rate. The market got a little busy. I don't know if Florida saw that or Georgia saw that, but I know that California and Texas, because of the territories that I manage, buyers got engaged really fast, really quick. And I want to bring her over so she can give you an update, maybe some tips. And also, because today our subject matter is foreclosure, I want her to bring you some information about a myth that is out there when it comes to foreclosure. People say or tend to think that the only way that you can acquire, if you're representing a buyer, is just using cash. And I'm have to tell you that that is not correct, right? Cash usually, moves fast. We know all that. But if you have a buyer that is interested in a foreclosure, and they have lending, they can sure go ahead and acquire this property using the right method. So Jennifer, if you hear me, you are welcome to unmute yourself and let us see your beautiful face as well.
Hi, everyone. It's in a really dark area, so
Okay.
you get to see my picture instead. But
Okay.
thank
Sounds
you
good.
so much for having me back. And Jima, I really love what you just said about the mindset, because in our industry, it's so important to have the right mindset, because especially when we're in a shifting market like we are, we have to be fluid and we need to really rely on that positive self-talk. So that was really great that you shared that. That's helpful for me as well. Um, so talking about the market, let's talk about interest rates first. So, I think the biggest thing right now that I have been asked a lot is really about the One Big Beautiful Bill Act, right? So that was just passed, and how does that impact the markets? Because as that we add to the deficit, that can generally have an impact on the bond market, right? But what we're seeing is that interest rates haven't moved very much. So if you look at the national average for conforming loans and FHA loans, you're going to still see rates hovering around the high sixes, right? 6.87, 6.75, 6.875. And for VA loans, if you do VA loans, you're going to be looking around the low sixes. So 6.125, 6.25%. Now, as we know, interest rates are they're impacted by many different factors. So you always, if you're quoting something, or if you're giving your customer information, you're going to want to make sure that you're asking all the right questions and at least give that range. Okay. And some of the bill that I wanted to point out to you that I think are important for you to share with your customers really is these extensions to the increases in the tax deductions, particularly as it pertains to real estate. So, one, the permanent mortgage insurance deduction, that remains. So it's subject to income limits. That's still something that buyers can take advantage of. If they're putting less than 20% down, they're paying that private mortgage insurance. Also the cap, the $750,000 interest deduction cap, that remains as well. And then I think most importantly is really the extension of SALT, right? The state and local tax deduction that is increased from $10,000 to $40,000 until 2029. So that alone is so important to be able to help your future homeowners make better decisions as it comes to their tax planning. So I can send that information over to you guys after the call, and just start using that on your social media, in your conversations, emails, things like that. And hopefully that gives you an opportunity to open new conversations with your prospects. And then you said foreclosures, right?
Yes. Thank you for that
Okay.
information. I was not aware about the 40 grand, to be honest with you.
That's huge.
Yeah,
Well,
that is
all this
huge.
information is so new. So that's why I wanted to make sure that I brought that to you and your team. So for foreclosures, it is a common misconception that only cash buyers are gonna win a foreclosure transaction. And it is more common only because, like Jamal said, the cash buyers tend to close faster and without contingencies. But if you have a buyer that is prepared and you're working with your right lending partner who can do all of the above and compete with cash, then your buyer then has an advantage. So what you want to do if you have a buyer that is looking for a foreclosure property is make sure that they're conditionally approved. So if you don't know the difference between conditionally approved and pre-approval, or even a pre-qualification, that is huge, because a pre-qualification is just a conversation. A pre-approval would be something where a buyer was talking to someone like myself. I'm an experienced loan officer. I'm giving my professional expert opinion that they're going to qualify, but I'm not the one that puts a stamp of approval on that on the for the buyer, right? That's an underwriter. So a conditional approval is someone that is going to submit all their documentation along with their application to an underwriter. An underwriter is going to review the entire credit profile. They're going to look at pay stubs, bank statements, all of those supporting documentation, and then they're going to give what's called a conditional approval. You'll be able to check off so many different boxes by doing this in advance. And then that way, you don't even have to have a loan contingency, unless, of course, you know your market better than I do. The market demands that. Now, where you can compete with cash is if you have a conditional approval, buyers can address those conditions up front and you can close a lot faster. The only unknown is going to be that property condition, prelim, things like that. However, if the buyer has enough down payment, or you work with the lender in advance, you can plan for worst case scenario. If a property doesn't appraise, if you have to reconfigure a loan, you'll know all of that by the time that you're in contract. But where it really you are able to really compete with cash is because your buyer is prepared. We can close as quickly as 10 days, 10 to 14 days. That's typically the average when you have a conditional approval. Now, a couple things that you want to know and make sure your buyers know in advance is there's costs to do the loan. So when a buyer is going to write an offer for a foreclosure home property, they're usually negotiating upfront with the realtor, and then you have to take that then the realtor takes that offer and then it goes for court approval. So once you get to that point of court approval, that's where you're on a very limited time frame. Generally speaking, from my past experiences, once it's court approved, they want you to close within 10 days. That's pretty standard. And so if that's going to happen, most of the work needs to be done up front. So inspections, appraisals, and all of those things come with a cost. So you want to make sure you're educating and setting proper expectations with your buyers to make sure that they know that there is this upfront cost, and they may potentially not know if their offer is going to be court approved, or it may be modified at some point. So those are the experiences that I've had, but I definitely have had buyers win over cash, because cash is obviously going to offer less. But if you have a loan, you can offer market and or higher, and you could still win that deal.
Correct.
Does that make sense?
Yeah, and the most important thing when you're dealing with foreclosure properties, just like if you're dealing with government properties, it's all about the highest net to them. They already have a loss. So if you if you have a buyer that is really going to be paying market value to them, and of course, assuming like Jen advised, is that you have a pre-qual buyer or even an underwriting buyer, meaning all their checklist to qualification is done, like all the source of verification is happening, and the only thing that you need to qualify is that foreclosed property, then things should move fast, really fast, along really fast. So if you are in a position, if you ever find in a position, because today my focus is not about representing buyers, is about you getting listings and how you can leverage that side of the market when it comes to foreclosures or pre-foreclosures in that sense. But if you are in a position that you get to represent a buyer just because you get that specific request, you can partner with a lender just like Jen, or a local lender of your choosing, but you want to make sure that you are both creating a strategy so you can be really fast in your delivery for that court. Any questions on this? You're welcome to unmute yourself. I feel like I am all alone. I am the only face in the Zoom meeting. No questions? Okay. Hi, Estema. Do you have a question?
I'm back. Yeah, I have a question.
Okay, go ahead.
Is this financial strategy is also applied to the auction properties, like the vacant lands and all that stuff, which are coming through the county or tax deed properties?
You can
It
use
could
it for
be.
all of the above, correct? The
Mhm.
really what the goal is to have your buyers conditionally approved and ready to go, and they can bid as well. Because what you're doing on those auctions, and Jamalish, you can talk more about the timing of it. It really is speed, because if someone else comes, if in the auction someone's coming in and say, I'm going to pay cash, they still have to get that cash ready. It's not really mattress money, right? So a lot of times they have to free up that money, and the time it takes them to do that, if you're prepared, you can, and you can get this the financing fast, like within 10 days, which is, it's not fun. I'll tell you that it's not fun for the buyer. But if you really set that expectation with them that they're going to have to pay rush fees for an appraisal, they're going to have to get any updated paperwork right away. If you set the proper expectation, it absolutely can be done.
Yeah.
Jen, question for you. I
Mm-hmm.
mean, I have been working with few investors, and I have a lot of vacant land listings, and people who are doing auction, they are normally buying those things with cash. Okay? But I see a lot of people who are interested in short sales and foreclosure property. Let's say if we have gone through your underwriter gives a commitment that yes, he is approved for the loan, and he's approved for the loan, then because I'm just thinking that when you are doing auction, they auction in that process, they don't allow you to inspect anything, they don't allow you to do any appraisal because they want the payment next day. Once you win the bid, they want the payment next day. What I have experienced. Okay, I don't know, maybe I lack experience, but this is what I have seen with the number of investors. They don't allow any appraisal or any inspection. Boom, I have seen many of my investors who bought the land and later on that land became defective or anything like that, and or they and then even they go for the survey after the purchase of the land. There's an easement, like one of the land I purchased in Punta Gorda. What happened that 25 feet from the back of the property that was required by the county or the city for easement, where they are going to put electricity and water drainage
Yeah.
and everything. So the investor came back to me and said, what to do? You know, so that
Yeah.
kind of
So
stuff. So I'm saying, well, how you are going to do it, because for financing, you normally require an appraisal and an inspection. So what we are going to do about it?
So Asim, let me tell you, I'm not sure about like for the appraisal purpose for lending, but and the reason why I want to share this with you, because one of the things that we're going to talk about today is because when it comes to these type of properties, you have to have a team and you have to have resources, which means this: if you have an escrow company or a title company that is part of your team, that title company and escrow company can do pre-escrows for you, meaning they can do like 90% of the research, meaning they're going to be able to find out if there are easements, they're going to be able to find out if there are liens, they're going to be able to find out if there's anything pending on that property. Any other person other than the bank that might have some interest in that, because remember, in a foreclosure situation, there could be silent liens there that happening, or any layers of liens, right? As a second, as a third, or whatever that gets to be clean. So if you are partnering up with the right team, meaning a local escrow title company, they should be able to help you acquire a lot of the data beforehand. So you are not, I mean, appraisal maybe not, but when it comes to actually understanding more about the title of that property and what's against that property as of today, you should be able to leverage and pull a lot of the data with their help, right?
And I'll just branch off of that too, and I'll just expand a little bit more and clarify. When I'm speaking of these fast closings, I'm speaking of foreclosure properties that have properties already built. Land loans are a completely different animal.
Yes.
It's not going to be the same thing at all. Land loans require a lot. It takes longer to close land loans, more down payment, things like that. So Land loans and properties are going to be different. So I can't speak to the land loan auction. But to answer your question about the appraisal, they say no appraisal. What they're saying is that you can't have a contingency for an appraisal.
Contingency, correct.
Lending will always require an appraisal because the lender is putting forth that money, right? So a buyer has to understand, like I said, worst case scenario. If the property doesn't appraise, do we have a strategy or a plan B? Can we restructure the loan? If a buyer's coming in with the minimum down payment, that's going to be challenging because then they'll have to pay the difference between the appraised value and the offer price. But if they came in with 20% down payment and the appraisal comes in lower, does that lender offer a program that would allow to restructure that down payment? So there's different ways to approach it, but yes, in the offer, you would not be able to have an appraisal or a loan contingency.
Yeah. Jen, the reason I'm asking you because in auction, when you are going with the county, city, or
Asim, can
association.
you get closer to the speaker? You're very far. We can barely hear you.
Can you hear me now?
Yeah, a little better. Yes.
Okay, so I'm saying when you are going with auction, they they require the payment next day. So I don't think so. I mean, in foreclosures, definitely you can wait, but as far as the auction is concerned, I don't think so. This financing can apply to that particular thing.
That's fair enough. But there are options for your investors who come in with cash. Once you close, and this isn't for loans, but you can free up that money if the lender has options to pull the money out right after you close. So there's no time frame to wait. So I have seen many investors do that as well. So just something to think about. But to be fair, if the auctions that you've experienced want the money the next day, that won't happen. That won't
work.
That wouldn't work with financing.
Yeah. Okay.
I see Liliana has a question. Liliana, you're welcome to unmute yourself.
Thank you. Jennifer, I have a question because I'm a little confused. So, when you're talking about actions, most of the time, they ask for the check right away after if you win the bin, they want to have the check or the money right away. So I don't know how this is gonna be applied in that term on that type of houses. So I just try to understand.
Yes, correct. So what Asim just clarified is on auctions, if they require the check right away, financing isn't going to be an option. Delayed financing can be an option where an investor or a future or a buyer comes in with cash and then they have what's called delayed financing. So then now, since they paid for the property in cash, they can now pull that money back out and a refinance afterwards. So correct. What you're saying is if in the auction they're requiring the payment up front or the next day, then financing up front would not be an option. Only delayed financing.
So I don't know what is the term because I'm new. So
no problem. So delayed financing.
So
typically in financing, lenders are going to require for you to keep the home a certain amount of time, a certain length of time before you can pull the cash back out of it. Usually it's 6 months. Some even have a requirement of 12 months. But with delayed financing, what that means is there's no waiting period. If you pay for a property in cash, the next day you can apply for a loan to take a certain percentage back out. So cash out refinances are generally anywhere from 75% of the purchase price or appraisal, whichever is lower, upwards to 80%. So every lender is going to have a different requirement.
Okay, so I just try to understand. Let's say that I'm going to buy the investor, he's going to buy a house. So he can put the old cash in there, and then once he had the ownership, he can do the refinance.
Correct.
Right after.
Right.
Yep, they can turn around and pull the money back out.
Okay, and what is the percentage of that? Is going to be 100% of the money that he put in?
No. Every lender is going to be different. It depends on what their maximum cash out allowance is, but
Mhm.
generally I would say in general it's about 75% of what of the home value or the purchase price, whichever is less.
I see. Okay, sounds good. Thank you.
You're welcome.
Thank you. Any other questions for Jen before we let her go? Okay. Thank you,
All
Jen,
right.
for joining us one more
Thank
time.
you.
And whenever you get a chance, please shoot us that email so we can share it in the group. Appreciate it.
Absolutely. Have a great day, everyone.
Okay, so let's get into this subject matter. Before I start my presentation, and like I said, this whole purpose of the presentation today is for you guys to understand where we are with the foreclosure market nationwide as of now, and see if you guys see this as a possible lead generation for whatever you are in the state. You know, in the United States, if you're from Florida, you're Georgia, you're Texas, or you are in California. So I know I don't see anybody right now face-wise, but I want to understand, have you worked with foreclosures before? Do you know what that is? What is your experience level for foreclosure? And if anybody wants to unmute yourself, let me know, and let me know which market are you at. If you're in Florida, if you're in Georgia, Texas, or what. Please let me know if we have experience here, because I want to understand what audience I have. Either I'm going really, really technical, or I go a little more generic and just jump you guys into, you know, possible scripts, and of course, where you can leverage and get this information from.
Yeah, and you can put it in the chat, guys. Just put it in the chat, yes or no, yes or no.
Just let me know, yeah. Not everybody at once. I know, Talia, you're very new, so I know that you and Liliana are newbies. I don't know if Maricela has any experience, but I don't know Hasim. I know that you work with investors. You do have experience. Okay, perfect. Who else? Eliana, Liliana, Rose. Okay, so Eliana has no. Claudia, yes. Rose, no. Janet. Okay, I have a bunch of no's. Okay, not a problem. Perfect. Thank you for sharing that, because I know where I'm going to go with the presentation. Okay, I'm going to be sharing my screen. And oh, wait a minute. Before I share this, I'm going to share this. Okay, one of the things that I encourage everybody to do, right, as part of our launching our week, or maybe a few times a week, is get into what's going on news-wise about your market and about lending and about everything that it has to do or will affect the real estate, industry in general. And one of the good sources, right, that I suggest you guys get involved with, of course, is Inman News. And also Housewire is a good source for all kinds of data that perhaps your local board doesn't really show so often or doesn't really share so often. So before I launch into the presentation, I am going to share with you a news that came from the GSIs. And for those of you that are new or do not know what GSIs are, basically Fannie Mae and Freddie Mac are when every time you hear that term in the industry, it's referring to those two agencies. And of course, those two agencies are responsible to basically serve, the conventional scenario or portion of the industry, just like the Secretary of Housing and Urban Development, right, handles the other side of the lending part, which is FHA, VA loans, and USDA loans, okay? So again, Fannie Mae and Freddie Mac are considered the GSEs, and then Secretary of Housing and Urban Development, better known as HUD, HUD, handles the VA, the FHA, and the USDA loans. So for you guys, when it comes to data and when it comes to evaluate what is the behavior of mortgages around, typically these two agencies will pull reports, quarterly reports, and will share data about how their loans are behaving, right, when it comes to the conventional market, and whether they are seeing some behavior in pre-foreclosures or whether things are stable or whatever that feedback. And the reason I wanted to share is because there is a shift, not a lot, because, thank God after the recession, the government has been extremely proactive about helping homeowners avoid foreclosures. And the reason why they don't want foreclosures is because it's very expensive for the banks. So even though you think, oh, the bank is getting all the benefits, they're getting the home, the whole workflow of a foreclosure is not a friendly and it's not a cheap process for the bank. And they are trying to avoid that loss in their book as much as possible. And now that they have the pressure from the government after the big recession that we had and we experienced 2008 to 2010, basically they're forced and they're always in a position to have those conversations with your clients, right? So the news that I'm going to be sharing with you right now, which I'm going to share, it comes from HouseWire, which is one of the sources that I recommend you guys to have it in your to-do every week to see what's new. It's showing a Q1 2005 summary of what has been the feedback or what has been the data released by these two agencies, so Fannie Mae and Freddie Mac, about the behaviors of ownership in the nation. And what it shows is that it's saying that Florida, California, and Texas, big shocker, right? 3 big markets in US, has had the highest numbers of delinquency loans at the end of March. Does delinquency translate into a foreclosure? No, not necessarily. But what that means to you as a real estate agent, this means that you have leads to call. You have people that you should be getting engaged with because these are people that may list their house or these are people that will become a buyer or both in a very near future for you. Okay. And it is if you want to include or venture into this space in the industry, you get to understand how to serve them, how to speak to them, where to search for this information, and basically the expectation of how soon are you going to be able to see money in your pocket, right? Once you decided to go ahead and serve these markets. I started in the real estate industry as a foreclosure broker. So from lending, which was my operating line of business, when I shifted completely my operation into real estate, my clients were banks. I was not dealing with individuals that much. I was dealing with the government. I was dealing with banks. And also, of course, when it comes to individual, my clients were all in trouble, or 95% of them were all in trouble. So again, this is 2005, the first quarter of the year is saying that there's a trend, not necessarily that we have a crisis, not necessarily that we have an issue in any of the states, but if you're in those states, it's something that you get to pay attention because again, this is an opportunity for you to maybe, add more leads, add maybe 2 deals a year or 3 deals a year, or maybe 5 deals a year. And I went ahead and took the liberty to talk to my favorite and one of the partners that I use for escrow and title in both states, Texas and California. And this is some data that I want to share with you. So she researched the Dade, Miami County, for those of you that are in Miami, and it's showing that there's 139 records of people that are behind in the mortgages since May. Okay, so this is good information. And in Orlando, there are 93 records shown that are in a pre-foreclosure, also in delinquent status. For those of you in Georgia, unfortunately, Georgia, it's very private when it comes to data, so I couldn't really leverage any information for Georgia. And maybe, the broker of Georgia, when she sees this, maybe she can share how or where will be the right resource for you guys to see, but it wasn't really available in the same public record data that I was able to find data for Texas, Florida, and California. So when it comes to California, and with California, of course, I went a little more intentional because I went to the counties that our office typically serve. And for Alameda County, there's 65 right now since May notice of default filed in the county, and there were 160 in Contra Costa. And I'm going to put a pause there because for California, when the recession took place, Contra Costa County was always the biggest number. And this is a market that you get to identify and you get to, if this is something that you want to add as a lead source, Contra Costa, it is the market that you should be looking into really strong. For Georgia area, in Duluth, she did found some records, but it was only 13 records from the last 2 months. So again, the data of Georgia, I'm not really fired up about what she shared, but it's information that maybe you, with the local broker in Georgia, you could go ahead and evaluate what will be the right source to find leads. Okay, so I'm going to go ahead and share my presentation really quick. Any questions on the information that I share? You're welcome to unmute. Okay. So moving along. Can you guys see my screen?
Yes, ma'am.
Okay, perfect. So because were a lot of no's in the chat, I'm going to go ahead and give you a little bit of background so you can kind of like understand how your market works when it comes to the foreclosure process. Remember, the reason for this call is for you guys to identify leads and understand how you're going to go be able to approach those leads and get some conversation going. Can you go ahead and go to a lead and say, hey, I know you're a foreclosure, go ahead and list your house. That's not the right approach. Let me tell you right away. It doesn't matter whether they are in 5 days within the sale date or anything there. So this is a client. This is a line of business within the real estate industry that is a very emotional charge opportunity. And you as a real estate agent, you need to be completely aware and empath when it comes to that. And you have to come as a counselor. You have to come as a resource provider. And one of the things that I always encourage to any agent that wants to venture is that, again, you have to have a team of resources that are going to be serving this client when you come to that table. So, and when I mean about that, I'm going to share with you those important people that I have identified that are key for you to be a successful listing. Because again, my whole presentation today is I want you to find these leads and turn them, if possible, into a listing. Because let's face it, a lot of people will modify, a lot of people will find a short-term solution, but the data shows that once the client goes into a delinquent pattern with a mortgage, chances are higher than not that they are going to continue or they're going to circle back into the same situation over and over, right? Because again, there's a psychological pattern to this, there's a behavior pattern to that, or some of them had notes like going back in time, back when the recession happened, which was 2008, 2010, and there were modifications made at that time. Some of the loan modifications that happen is that those lenders that work with your clients or with those owners, what they did is that they split the mortgages in two. They had one mortgage, right, where they will calculating a payment on, and then they have a silent half or maybe a third of that note in silent here that was not going to be activated or going to become an active debt until future years. We're talking about maybe 5, maybe 10. And what has happened is that when that math goes back and joins together, guess what? People can no longer afford their houses anymore, right? Because they were in this kind of like, oh, I'm in a relief mode. I can, make the payment based on this amount of money. And my financial circumstances has not catch up. I haven't really put myself in a financial situation to offset everything when everything comes back together. And we have seen those properties, when those loan modifications have become due, is also part of the reason why we also see foreclosures. Another source of foreclosures that we've seen out there is reverse mortgage foreclosures. And I don't know how you guys are versed in the reverse mortgage arena, but a reverse mortgage basically, of course, is for seniors. And the benefit of those programs, which I think are great loans, but of course the senior gets to understand, and the family of the senior gets to understand how they work, is that it freezes the senior monthly responsibility in order for them to have a more peaceful way of living every month with their income, with a specific income, either it's a social security income stream, or maybe there's a combination of a pension and then your social security, right? So there's no way for that senior to basically maybe growth or add to that income every month. And when they go and select a reverse mortgage, then they free themselves into the monthly payment. They do still have to make the mortgage, the taxes and the insurance of that home, but then the monthly payment is not really required. Can they make the mortgage payment? Absolutely. But it's something that is not required. And of course, then you start into a negative amortization, right? Building up against your equity of your home. So what happens when that senior either dies, or that senior no longer can take care of themselves within that household? Those two circumstances triggers their note, meaning if they're dead, the bank is time to collect, right? They're going to come back at the family and say, hey, listen, the owner of this house is deceased. Sorry for your loss, but it's time for me to cash out and see what I can do with this house. Or if this person became disabled, meaning they have to move away from that house in order for them to go to a disability center or something like that, that is also another situation that will call the note. And then those homes are there. And then the family can always sell. So that's an opportunity for you to look also at that top source of lead. But what we have found, especially in my experience with the California and Texas market, is that a lot of these seniors are solo. There's no family that is claiming them. There's nothing. And then those properties are going into a foreclosure process, and those properties are coming back as foreclosure opportunities. Okay. And that's another subject matter, because that's actually going into the HUD properties. So what is that foreclosure and how does it work, right? So it's the legal proceeding initiated by a creditor to repossess the collateral of a loan that is on default. And it depends on the state. There are different ways that a foreclosure process can happen, and there's different speed that takes place. Some states takes longer, some states can be super fast in this process, and the owner doesn't have enough time to take actions, okay? So California, Georgia, and Texas primarily are what they call a non-judicial foreclosure state. And a non-judicial foreclosure state is that there's no court intervention when it comes for the bank to actually go through the process of foreclosing a property. But the state of Florida, guess what? They do. They do require, it's basically a lawsuit that gets formed against the owner, and that's what is called a judicial foreclosure. Any questions on that? Okay, so a judicial foreclosure requires that the lien holder file a civil lawsuit against the owner, and they must obtain a judgment from the court before they're allowed to sell any property. And this, like I said, this is very specific to the Florida market. And then the non-judicial foreclosure is also referred as a power of sale from the institution that allows the lien holder to sell the property without having to file any civil lawsuit. This takes it moves a little faster than the court, because the court can take a little bit, depends on how busy the court is and all that. But this basically affects California, Texas, and foreclosures. There's also what they call expedite foreclosure processes, and this is a judicial foreclosure that is required in certain situations, such as what I mentioned, a reverse mortgage, an equity loan. Remember, an equity loan is basically a lien or a debt that follows you as an individual, in addition to a possible property, because they use the property as a collateral, but it follows you as an individual. So you do have, the creditor has the right to expedite foreclosures because of that. And then homeowners association, remember that they do have the right to foreclose on the property. So sometimes you see foreclosures happening, and not necessarily it's because they're behind on their mortgage, but they are behind in the homeowners. And I know that Florida is a state that is having a huge issue with how expensive homeowners association is becoming. And they have the right to foreclose on your property. They go actually above the lien holder when it comes to that right, just like property taxes. Any questions on that? Okay, so the timeline in California, this is very similar also to Texas and Georgia, is about between 90 and 120 days. Everything happens when you're behind that amount of time, right? So when you are about 3 months behind, or it's basically when the lien holder, if you're not talking to them, right? Because remember, if everybody has troubles, right? And if you are in trouble and you can't make the payment for whatever reason, this month, but you take the phone and you talk to your provider, your servicer, and you say, hey, Bank of America, just for an example, I have an issue making my payment. I need you to work with me. Is the right, they have a duty to you to try to make something work, right? And if you have that conversation, maybe they go ahead and say, you know what, and this month we're going to go ahead and put it back in your principal. No worries. Next month let's evaluate where you are, right? But if you are an individual that are in a financial situation and you start hiding, because that's typically what happens, unfortunately, and you start looking the other way, and this is not happening, I'm not handling this today, and then another month takes place, and then another month takes place, and you're not communicating, guess what? By the book, those lien holders are going to start calendaring out your timeline in order for them to start triggering those action points. And it doesn't matter what state you're in, that's usually how it handles, because they have to start the process going, regardless of whether they are in 120 days, you're behind, and then suddenly you decide to pick up that phone and start a conversation with them. Their duty to their investors and their beneficiary is to actually start recording those states for a possible foreclosure process. Any questions on that? And I'm going to go ahead and share these at the group level so you guys can all have it and you can digest it. And again, if you have any questions when you go over all of this, we can go ahead and discuss it. So I have basically how the timeline for Texas works, Georgia works, Florida work. And then I want to talk to you about, what are options that a consumer have. And the reason why I want to bring those over to you is because if you are identifying this as a possible lead source, like I mentioned, you get to be empath and you get to be resourceful, because this is not a lead that you are going to be able to convert really fast. Can you? Yes, depends on the timeline, right? So if this person is already in a possible very short-term proceeding, meaning they're maybe a month away, maybe there's an urgency there, and maybe you are going to be able to capitalize on a possible listing faster. But if it's not, if you're talking to consumers that are behind what is called a notice of default status, maybe they're 60 days behind, maybe they're 30, maybe they're 90, maybe they're 120 days, right? Then the conversation may go, in different ways. For example, right, a client can say, can just do nothing, and they're just going to go ahead and let the house go. They can go ahead, of course, find some money and pay off what they're owed. They can look for a reinstatement option with the bank. Say, you know what, I'm sorry, I was behind whatever 4 months, but I do have the funds, and I actually have the funds to pay the lawyer and pay everything that I owe. I want my house. I'm going to keep it, and my situation is back on track. You can always seek for a loan modification. And like I said, because of the recession and the chaos that happened across US, lenders are really open and willing to have conversations about loan modifications. And then, of course, a forbearance, which is a temporary fix. And this is something that a client or a consumer can request and say, hey, listen, I'm behind these 30 days. And when the lender selects to go ahead and take that mortgage payment of the month and apply it to the principal and basically is considered a payment, that's basically what a forbearance means. Questions on this? You're welcome to unmute yourself. Okay, no problem. Okay, when you can do a partial claim, right? So you can do a secondary lien to go ahead and include the bank statement, the back payments that you owe. Your first lender can have the right to create a secondary lien just to kind of like offset you and put you into 2 mortgage payments so you guys can catch up. You can do a deed in lieu of foreclosure, which means it's like, you know what, lender, I'm sorry, I cannot afford this. Here are the keys of my house, and write the deed in lieu. I'm walking away, right? You can also seek for bankruptcy, which is some people go ahead and do that, and then you can do it through the Chapter 7, which is, of course, the liquidation of all your debt, or you can do a Chapter 13, which is basically you create an installment payment plan with the court. Or you can do a sale, which is basically the reason why I want to bring this to the table for all of you. Questions? Okay, I am going to, in this presentation, you guys have everything that you get to know about the loan modification. I am going to skip all that because of time, but it's going to be in the presentation. And again, if you have any questions, we can go about that. But remember, the reason for this call is for you guys to consider this as a possible stream of income, and a loan modification is not really going to give you an immediate stream of income. It's going to allow you to gain a client for future references, or maybe that client that you help facilitate a loan modification with will open the doors to their sphere, meaning, oh my God, Jamal saved me. I am so grateful. And they can become your cheerleader just because you did help them when they needed you the most. So the loan modification is a great way for you to build business in the long term, but not necessarily is a conversion for that specific client. Has the loan modification turned into a sale? Out of 5 times, 2. Yes, they do. Okay. Short sales, this is basically another conversation or another presentation on is all. A short sale, for those of you that do not know what that means, is basically you as an owner are listing your property and your current mortgage is actually more of what the market value of your property is. And you go ahead and go through a process with your mortgage or your lender saying, hey, lender, I'm out, I can't afford this house, but my debt is higher than the market, and this is the evidence of that, right? And I need you to allow me to sell it, and let's work the math on that. And that's what a short sale means in a nutshell. Questions on that?
I have a couple of questions in the chat.
Okay.
So I have, where do we get the information regarding the properties for the leads?
Yep, I'm going there. I'm going there.
Emili's question.
Yeah.
And there go, oh, I'm sorry.
Okay. So in this term that you say is a short sale, what's gonna happen with that?
The difference?
The difference, that you own in which, how much is worth the house. What's gonna happen with that difference? The owner, he's gonna pay after, or how that works?
No, not necessarily. And that's something that you as a professional, that's why they need you as a professional in a short sale, because part of the negotiation with that investor or that servicer is basically you requesting that whatever they agree upon the sale, the remaining is basically white out. It's not going to come after the client. And that has to come in the language of the approval. If you don't have a sentence in that approval in a short sale that says that basically there's no recourse for the difference in the mortgage, right? Guess what? They can sell the difference to a collector and somebody is going to hunt you down for whatever that money is. So our job as realtors when we're serving short sales is that we get to negotiate everything, including that language in that loan modification approval. Again, if it's not there, the lender has the right to go after you.
So, okay, so I just try to understand. So basically I have to do a documentation in order to the client, he don't have to pay them the difference afterward.
No, not you. So when you are representing a seller in a short sale, you get assigned what they call a short sale specialist within the bank. And that person will manage the deal, and they will look at everything that is on that property, right? And they're going to go ahead and they're going to do an appraisal on the property, and they're going to look at, comps, and they're going to probably request of you what is called in the industry a broker's price opinion, which is a real estate professional opinion of a value on a property. And they're going to be requesting, your arm and leg and organs and blood samples and all of it, right? Because what they're trying to understand is that, are we really in a short, right? Is this really a loss? Is it more lucrative for a bank to go through a short sale versus a foreclosure? Absolutely, yes, right? So they would work with you in a short sale, even though they might take longer, because the thing about a short sale is that they have to go back to anybody that is involved as a beneficiary on that note and ask for permission for short sale. And guess what? That beneficiary can be in China, could be in US, could be in India, could be whatever. And that is what it takes so much time in the short sale approval. But when you are talking to a lender, and a short sale will not talk to you, a bank is not going to talk to you about a short sale unless there's an offer in place. So me as an owner can say, hey, Bank of America, I want to put my house on the market, and I have Liliana, the realtor, to represent me, and the market doesn't sustain my mortgage, and I want to start a short sale process. Guess what the bank is going to tell you? Get back with me when you have an offer, because the only way they can work on their math is with what the buyer is willing to pay for that property. And then they're going to go ahead and run all the math. And they're going to say, okay, I approve that offer, or they're going to make a counter to that offer with terms. And when I say terms, that means commissions. That means whatever taxes are owed. That means whether you need repairs or not. That means whether you're asking to, pay any city liens or anything that is extra against that property. That means anything and everything that equals math for that property. And one of the things that you as a realtor have to negotiate with them is that, hey, listen, that's fine. Buyer is willing to move with your counter, seller is willing to go ahead and execute, and we're good. But I need you to basically allow my client, like do not have any recourse on my client. And that's part of your request as a representative from your client to that seller. To the bank, and the bank is going to either put it on the letter, or it's going to know. Primary ownership, meaning owner occupancy properties, usually they will give you that. In an investment property, take a hike, they would never approve that. Make sense? Any other questions?
Thank you.
Good afternoon. I have a question.
Yeah.
If the house is going to go in short sale, who is paying our commission? The bank?
The bank. The bank has to approve everything about the math. And that's why you have to put everything in writing for the bank. So in your listing agreement, that's what I tell all my agents, is like, ask for 6, ask for 10, ask for 20, ask for whatever it is. And they're either going to approve it or they're going to give you a counter.
Thank you.
You're welcome. So who do you need when you're representing, or whether you're trying to open this line of business for yourself? You need a team, either for short sales or for foreclosures. And that team, basically, you always have to have somebody from escrow and title, because again, you are, oh my God, you're kind of like a lawyer. You are a researcher. You are an inspector. You become so many roles in one, for one transaction that is crazy. So you need to work with nonprofit organizations to a point, because maybe you are so close to a possible foreclosure, then you need somebody. If you are not able to stop it, representing your client, you can put a third-party nonprofit in the middle and to try to stop that sale, right? And if this is a nonprofit that is government approved, meaning it's a HUD approved nonprofit organization, they might have more power in stopping a sale than you as a professional trying to represent your client. You also want to have a CPA involved, or a tax practitioner involved in this, because there's tax issues here, right? You want to understand there's a debt, right? You want to know in your state, if they forgive some debt, is that going to translate into personal income like the state of California does, right? So you want to have a professional that is going to be able to provide guidance to your client. And when you are establishing that strategy, whether it's going to be a sale for foreclosure or whether you are in a short sale position, what do they need to know and how do they need to prepare, so when the tax season comes, they're not in trouble either, right? And then, of course, in certain situations, you must have a real estate lawyer as well, because you might need language in contract terms, right? In writing certain things, or maybe an addenda that is going to be attached to that. So again, this is not me, Jamal, solo. Oh, here I have an opportunity to help a client, and maybe the venue is a short sale, or maybe it's a pre-foreclosure sale. I can't do that by myself. If I go in by myself, I'm doing a horrific service for that client. And you need to be aware of this, because if there's something goes wrong, they're going to go back to you and to your broker, and it's going to become a big mess. Questions on that? Okay, so where do you get the leads? I'm just going to jump into that. your sales rep at an escrow and title, right? So whomever does your marketing or offers certain things for escrow and title, they typically have platforms that allow you to search for leads online. Like, for example, in our market, I don't know if you guys work in Florida or in Georgia with First American Title, but First American Title is one of the biggest escrow company nationwide, and they have a platform called Ignite. And in Ignite, you can search, for everything in regards to foreclosures and notice of defaults, or whether it's a possible short sale situation, because again, it's just a matter of list of values. And they provide you those leads, and the records with name, addresses, are basically for free. And then if you want to add like the phone numbers and an email, it's such a cheap cost that even if you have, like, I remember I bought a list for like 50 names that were in foreclosure, and maybe I pay $5. It was super cheap. And then of course, that's your sphere, right? Your old clients. Always check with your clients. You never know where your clients are at. So you always want to do a temperature check about, hey, how you doing after a year that they bought, and maybe 2 years, and maybe, always have that conversation. If you know of anybody that may be in a financial situation, remember, I'm here for you. I don't only do regular sales. I also specialize in this. And people will talk. They always know somebody that needs help, and they will give you that source of referral. Bankruptcy lawyers, divorce lawyers. Divorce is there's so much that you can do with divorce lawyers at so many levels. And one of the things that you can check always is the temperature of, what's going to happen with this property. If the wife is keeping it, is she going to be able to pay? If the husband is keeping it, is he going to be able to absorb it, right? And then you could just throw yourself as a consultant, right? If anybody needs have any questions about, their assets, right? When it comes to real estate, please, I'm here. I would love to get the opportunity to interview them for whatever they need, right? Have me, call me, whatever, free, whatever the script you want to use for that. But those are very big sources. Lender's relationship. And when I say lender relationship, this is not like the Jennifer of the world, because Jennifer, it gets involved to a certain point. This is basically relationship to like your about like your oh my God, what do you call that? Like the loan default departments of lenders. And you can go online and you can find who's the contact, and you can do mailers, and you can try to meet them. These people, when you go to real estate conference, the Chases of the world, the Bank of America of the world, the Wells Fargo of the world, they're always there serving and either presenting or they're physically there. And when you go to those big realtor conferences, you are always going to mingle with lenders, and that's where you get to do, meaning you get to understand who is who and how you're going to be able to connect. Of course, you need to also use the platform of LinkedIn, right? When it comes to professional, right? That's where people really at professional level, they connect. And you can always do your search of who's who in the different lending arena when it comes to that. And then nonprofit organizations, right? When it comes to nonprofit organizations, you have to be very specific, and you cannot come across like a shark. And what I mean about that is that you have to be very empath, and you have to come as an additional resource, not necessarily, hey, if your loan modifications fall through, I'm your agent to sell. No. You have to basically bring something of value to the nonprofit, maybe volunteer, maybe build a relationship, maybe, I don't know, sponsor an event, something that gets you in, so you can start being invited and being involved with the of these type of presentations, right? Because they do community events about people that are in trouble and the resources they have. And they don't open those for realtors because they know how we are, right? I'm the agent, and then we come across salesy, we come across empty, we come across like only thing we want is that commission. And you can't approach the nonprofit agencies that way. You really have to come into a contribution side of it. You have to bring like the value of like, I'm here to catch you. How can I catch you, right? and I have your back. And once you do that, they will provide you leads, and they will test run you, and please do not mess it up, right? If they give you one lead and you're able to nurture that thing and provide a solution for that client, you got that. But if you mess it up, oh my God, it's done deal. You're not going to have another source of lead with the nonprofit agencies. Any questions?
I think that's it. Thank you so much, Imalis. I haven't seen any other questions. There's different resources. I just wanted to mention that there are different resources, like she mentioned. I will record a video on our Florida way of doing it through IMAP, where you can get the pre-foreclosure list for free. And you can start contacting these people or sending them mailers or letters or something. So I will definitely do a training. I'll post it in our VIP Connections YouTube channel, so you guys can go in there and take a look. And hopefully I'll have that up by Wednesday, Thursday of this week. Okay. Thank you so much.
One more thing before we leave.
I'm sorry, Mr. Shaw.
Yeah, I mean, if we can get another training of title toolbar.
Okay.
Because title toolbar is one tool where you can get everything, like foreclosures, pre-foreclosures, all kind of data is available over there. And one of our friend from our La Rosa title company, I don't remember, I think it was Red One or something like that.
Yes.
There's a very nice Gladius. Gladius is the one who gives training for that, if you can get her.
Okay, perfect. Teresa, take a note on that one.
Yeah, Red Door title. Yeah, for sure. We have actually it's no longer called Red Door, it's called FPG, Florida. I'm sorry, FPG for Family Passion and Growth. FPG title, and yes, they do have I believe that in their app, their Palm Agent app, they do have something called Ignite or something similar to that she can teach on. So we'll bring her on to do a class for sure. For those of you who haven't, this would be for Florida, because I think they're only in Florida at this time. But the app is really, really good. It has a lot of things. Actually, I will record a little training on that as well, on the Palm Agent app, which is amazing.
Okay, thank you.
All right, guys. Well, thank you so much.
Thank you. Thank you.
Oh, by the way, guys, invite someone to these meetings, okay? Because remember that if you're here, you're under the revenue share program, and obviously we want to help you build your organization. So invite someone. We are going to start. I spoke to Maria from División Latina. We're going to probably start next week, if at all possible, creating breakout rooms in Spanish. So whatever class we're teaching in English, we're going to teach it in Spanish, but it's going to be in a different room. So our Spanish agents, if they feel more comfortable in Spanish, can jump into that class. We'll continue our English here, and eventually we'll get our Portuguese class as well, a Portuguese breakout room as well, because we want to make sure that all our markets are covered and all our agents are covered. I don't want, to leave out our Spanish agents, and I don't want to leave out, our Brazilian agents or Portuguese speaking agents. So we're going to try to create breakout rooms. So it's still going to be the same thing, the same link. Everything's going to be the same. We're going to teach on something. We're going to give you some inspiration, but it's now it'll be in whatever, those 3 languages. So that way, if you feel more comfortable in Spanish, you can break into that Spanish breakout room and basically see the same presentation in Spanish. Okay.
Perfect. That's exciting.
I know, that's exciting. I know, I'm super excited about that. Okay. So we hope to see you guys next week. Again, invite someone, so that way we can try to help them, get on our team and get on your team. So that way